Good evening, it's Brian Shannon from Alpha Trends. Let's go ahead and take a look at some stocks for trading on Tuesday, the 8th of May. I've got shares of Pier 1 Imports, symbol PIR on the screen. We're starting out with a 30-minute time frame. Just want to show you the recent action here. We had a nice rally that was earnings-based back in the middle of April. And then the stock has subsequently broken down a little bit and pulled back. Now it looks like it's back above that rising 5-day moving average. And I think getting above $7.50 a share again puts the buyers in control. And the stock ought to run at least to $8 a share. So that's 50 cents of upside. And our stop should go just under that 740 level. So let's just say $7.38 is our stop level, and our upside target would be $8 a share. So that would give us a risk of 12 cents for the opportunity, hopefully, to make about 50 cents in the stock. Now, looking at the daily time frame, you can see that it's back to this level where we had prior resistance. We've also got a rising 50-day moving average in this area. But if we take a look at the weekly time frame, I already drew these in earlier as I was just looking at the stock because I thought it was kind of interesting from a longer-term perspective. Even on the monthly time frame, you can see the stock's been in a horrible decline. But now we've got that green moving average. That's the 40-week moving average. It's flattened out, and it looks like it's in the condition where it could head higher for an investor's standpoint. Now, for an investor to really feel as though the buyers are in control, I think it needs to take out this $8.50 level, though. Actually, $8.30. It's broken the downtrend line, so that's one good sign. Now what we need to see is a higher high, and taking out $8.30, that's where the investors should become interested. However, from a short-term trading standpoint, we're going to be out before then with our target of $8 a share. If you have the investor mentality, then this might be one you want to keep in mind for a bigger potential move by scaling into it a little bit here. Intersil is on the screen right now, symbol ISIL. If you look at the daily time frame, you can see it had an event here, which was earnings. Big volume, the stock was up. It found some support at that 10-day moving average. And now the stock looks like it's got a little bit of resistance in here at the 31.20 level. So I'd like to purchase the stock above $31.10. Excuse me, $31.20. And initially I'd say a stop goes down at $30.95. So that's only 25 cents of risk on this stock. And looking at a weekly time frame, you can see that we're at multiple year highs here. And in fact, when we look at the monthly time frame, you can see this level has been very important here, and I think the stock can make it up to at least $32.50. But this is just a real nice little, a nice big, I guess, cup and handle here on this weekly time frame. So the stock looks very good to me for a limited risk of 25 cents. I think we can see the stock rally up towards about $32.50. So that will give us a target that's $1.30 away for just 25 cents of risk. Now, a listed stock, Arch Coal, symbol ACI. First of all, we're going to look at this 10-minute time frame. You can see that the 5-day moving average is starting to rise once again. So let's just back it up to a daily time frame. And you see that the stock had recently broken past some resistance near this $36 level. And the stock has found some resistance up here more recently at $36.20, but we've got higher lows in here as well. So looking at a weekly time frame now, I'm kind of going backwards here, starting from the shorter term time frame. I should have started with a weekly, but to see that the stock has broken past this longer term level of resistance from late last year, and now we've got this 200-day moving average flattening out again. On the daily time frame, we see higher lows, and the stock keeps hammering away at the resistance. What I think it would take for the buyers to take control here is for a move above $37.20. Now, it's going to have to also make it past this next level right here at $37.60. So what I want to do is buy the stock at $37.20, set an initial stop at $36.90 a share, and if it gets past this level or it gets up to $37.60, let's raise our stop to break even. But I think the stock has the potential to make it up towards about $38.15, and that's to coincide with this high right here. And again, I think that's a conservative target. This could be a better longer-term trade as well. So if it does play out the way I just laid forth, though, we'd be risking about 30 cents for the opportunity to make 95 cents in shares of ACI. Digital River, DRIV, is the symbol there, and this stock has also shown some strength recently as it broke past a little level of resistance in here at about the $57 level. If we back it up to a weekly time frame, you can see it's been in a very healthy uptrend. Kind of consolidated for a little bit, but has made a higher high right in here recently, and it's holding on to those gains as well. So looking at a shorter term time frame, I think that the stock looks like it's starting to toy with this little downtrend line here over the last week and a half or so, and you can look at this as an inverted head and shoulders pattern. Remember that inverted head and shoulders pattern doesn't always have to be just nice straight like this. It can have that that curved look to it as well, so or rather this slanted look in here. So if we take the height of this pattern, 57 up to 59, that will give us a target of $2 a share. Add that to where I think the proper place to buy the stock is, which is 58.65. If you buy it above there, that will give us a target of $60.65. Our target's going to be more conservative, though. Let's just say we're looking for $60 a share, buying it above 58.65 with a target of 60, and our initial stop will go at $58.22. So that's 43 cents of risk for $1.35 rather of upside. One stock, I'm not going to recommend it as a short, but it just seems as though since the earnings came out on this stock, and this is Google, the stock has been under pressure. It's making these lower highs and lower lows. I think a lot of people are probably looking for support at $50 a share. A lot of times what's obvious is obviously wrong. It's broken this little uptrend of the last couple weeks, and on a weekly time frame, you could make a case that maybe it's going to break this as well and head down towards 450 or so. You know, that's where this 10-day, or I'm sorry, this 200-day moving average is. But a lot of high expectations, but Google really hasn't done anything but cause people losses since the last earnings report. And I think it could be vulnerable here. If you do trade the stock, here we got a declining 5-day moving average. It tried to recover above that but failed to. Be very careful with the stock. That's why I'm not going to give any recommendation at all on Google. I'd say you're on your own because it's so risky.